Japan's exports rose by 2.6% year-over-year in April 2023, below market expectations of 3% and the slowest pace since February 2021. This indicates that the recovery of the world's third-largest economy is losing momentum amid the ongoing pandemic and supply chain disruptions. Japan relies heavily on exports of cars, machinery and electronics to drive its growth. However, these sectors have been hit by a global shortage of semiconductors and rising shipping costs. Moreover, Japan faces stiff competition from China and South Korea, which have been expanding their market share in key regions such as the US and Europe. The slowdown in export growth also reflects the weak domestic demand in Japan, which has been struggling with a resurgence of COVID-19 cases and a slow vaccination rollout. The government has extended a state of emergency in several prefectures until the end of May, which has dampened consumer spending and business activity. Analysts warn that Japan may slip back into recession if the situation does not improve soon. Therefore, Japan's export performance in April is a cause for concern for both the government and the central bank, which have been trying to support the economy with fiscal and monetary stimulus. They may need to take further action to boost confidence and demand in the coming months. The deceleration in export growth was mainly due to a sharp drop in sales to China, Japan's largest trading partner, amid rising trade tensions and cost pressures. Japan's exports rose by 4.3% year-on-year in March 2023, marking the 25th consecutive month of growth, but also the slowest pace since February 2021. This was below the market expectations of a 6.5% increase and a significant slowdown from the 6.5% growth recorded in January 2023. The main factor behind this slowdown was a decrease in shipments to China, which fell by 7.7% year-on-year in March 2023, after a 4.5% decline in February 2023. This was the fourth straight month of contraction in exports to China, reflecting the impact of rising trade tensions between the two countries over territorial disputes and human rights issues. In addition, Japan's exporters faced higher cost pressures due to rising prices of raw materials and energy, as well as a weaker yen that increased the value of imports. Imports rose by 7.3% year-on-year in March 2023, outpacing exports and resulting in a trade deficit of 754.5 billion yen, $6.6 billion, for the month. The slowdown in export growth poses a challenge for Japan's economic recovery, which relies heavily on external demand. The government has revised up its growth forecast for fiscal year 2023 to 1.5%, from 1.1% previously, on the back of higher capital expenditure and wages. However, this projection may be revised down again if exports continue to lose momentum amid global uncertainties and domestic headwinds. Japan's export slowdown could weigh on its economic recovery, as exports account for around 19% of its GDP and have been the main driver of growth since 1960. In April 2023, Japan's exports rose by only 2.6% year-on-year, below market expectations and the lowest pace since February 2021. This was mainly due to a decrease in shipments to China, its largest trading partner, which fell by 7.7% for the fourth consecutive month. China's imports also contracted sharply in April, indicating a feeble domestic demand amid rising global interest rates and banking sector jitters. Japan's exports to other Asian countries, such as South Korea, Taiwan and the Philippines, also declined in April. On the other hand, Japan's imports rose by 7.3% year-on-year in April, driven by the high cost of energy products and the depreciation of the yen. This resulted in a trade deficit of 754.5 billion yen in April, and a record annual trade deficit of 21.7 trillion yen in fiscal 2022. Japan's trade balance has been in the red for most of the past decade, as its domestic demand has been weak and its energy imports have increased after the Fukushima nuclear disaster in 2011. The trade deficit could widen further if Japan's export growth continues to decelerate and its import costs remain high. This could put pressure on Japan's public finances, which are already burdened by a huge public debt of more than twice its GDP. It could also undermine Japan's economic recovery from the COVID-19 pandemic, which has caused a severe contraction of 4.8% in GDP in 2020. Japan's core consumer inflation also re-accelerated in April, despite the government's energy subsidies, adding to the challenges faced by the Bank of Japan to achieve its elusive 2% inflation target. Therefore, Japan's export slowdown in April is a cause for concern, as it signals a weakening of global demand and a loss of competitiveness for Japan's key industries, such as cars and steel. Japan needs to boost its domestic consumption and investment, as well as diversify its export markets and products, to sustain its economic growth and stability.